Hello everyone. Today I wanted to kind of do a little bit more of a shorter informal video on a topic that I've kind of noticed is a pervasive issue, especially when it comes to a lot of like Dave Ramsey forums and Dave Ramsey groups. It's not that there's anything wrong with this. I want to kind of clear the air though, especially when it comes to folks that are getting above water, which means that they have their emergency fund and they already have they're already debt free and they're starting to work on their towards their investment journey and building wealth. Now, one of the issues that I usually see happening is this huge push for financial advisors, and that when people are first joining this whole investing world, that one of the first things they should do is start looking for a financial advisor. Now, financial advisors, just real quick, are folks that help you decide what to buy when it comes to investments. So whether they'll tell you, oh, you should buy shares of this mutual fund, you should buy shares of this bond, you should buy this particular REIT, or you should buy this particular whatever in order to help you reach your goals. Now they'll contrast that with a financial coach. And a financial coach really is just someone who will help you with your budgeting, help you reach particular financial goals, such as, you want to double your salary, or you want to, increase your net worth by $20,000, whatever. So this is a comment that I read and says, I'm very new to the investing world. I know Dave says Roth IRAs and mutual funds. I want to manage my own account without a lot of fees. I know I have no clue how to manage them as of now, but I'm learning and I want control of my money. Great. Where is the best, cheapest place to open a Roth IRA? Anyone use Schwab? Also, with a Roth IRA, I can withdraw any money I put into it at any time without a penalty, correct? Just not any growth. Thanks for any and all help. All right, so I'm just going to answer these questions from my own perspective, and that is, when it comes to a cheap brokerage account, which is really what you're looking for, nowadays there's a lot of free online brokers that would be, including, Charles Schwab is one of them. There's Vanguard. There's, I think, Robinhood. I don't know. I think Robinhood allows you to do free trades. M1 Finance. These are all a bunch of online brokers that basically allow you to trade for free. So if you have to pay for a trade, meaning, there's a fee in order for you to buy shares of a particular company or a fund, that way of doing business is kind of getting phased out just due to the free online brokers that are out there. And there's a lot of great ones that are out there. Now, the other thing I want to mention is there's the red flag with regards to taking money out of the accounts and not getting any kind of penalties. So technically it's true. You can take money out of a Roth IRA. That's just the principle. So if you deposit $100, you can take that $100 out. What you can't do is take any of the growth out. So let's say you get 10% growth or $10 that you made on that $100. You can't touch that. And the issue is you have to work very carefully with the broker as well as your tax person, like your accountant, to make sure that any money that you do take out is in fact none of the gains. Otherwise, there's going to be major hassles when it comes to that. And the way to really best to look at that is just whenever you're putting money away, just think of it as you're not going to see it for probably the next 20 something plus years. So just assume that you can never touch the money out again, and never make a decision on whether or not you can, or whether or not a certain brokerage is a good idea, or never even make a financial decision or a strategy relying on the idea that you have the option of taking money out of any kind of a retirement account. Now, with all that out of the way, let me go through some of the responses that I saw. So this first response is, I've been investing for 30 years and have learned a ton about investing over those years, and it was because I surrounded myself with good advisors that taught me, and since you don't know anything about it, I would highly recommend finding one, that'd be a financial advisor, that has the heart of a teacher and is fee-based, not commission-based. A good one that teaches you will make you more than he costs you. And another one that says, Dave also says to get a financial advisor with the heart of a teacher. If you follow Dave to get through baby step 3, and you should hold off investing until you do, why would you stop now? Dave has said worrying about the fees for an advisor is wrong. A good advisor will earn you far more than you pay them. All that said, if you really want to do some investing on your own, learn from your professional advisor first, get your retirement on a secure track, then use what you learned from the pro to do some on the side. I'm going to respectfully disagree with these answers, and the reason is because a lot of the information that you can learn from an advisor is information that you can learn on your own. One of the first resources I would definitely recommend taking a look at is J.L. Collins' Simple Path to Wealth. Jim Collins wrote this book mainly for his daughter because his daughter didn't want to worry about all of these kind of finances and investing and everything. So he wrote a very simple, it's a series of blog posts, and you can check them out on his blog as well. But he puts them all in this book that basically outlines for her how investments work, how IRAs work, how 401ks work, what to invest and when to do different types of allocations, so that this way she doesn't even have to worry about it. Hence the name, Simple Path to Wealth. Now, following that up, another good resource that I've used is Common Sense Investing by John Bogle. And John Bogle was one of the founders of the Vanguard Group, which is the Vanguard company that I currently have my Roth IRA and my 401k with. This is really great for learning about the difference between active managed mutual funds and passively managed mutual funds. And it's pretty straightforward. It doesn't really go into a whole lot of technical jargon, but it also goes over all the different fees that you'd have to pay for one versus the other, and really just how the stock market and how index funds work in general. So you take this and you combine it with Jim Collins' book, and that'll give you a very good understanding on the basics on what a 401k is, what an IRA is, what the Roth 401k is, the Roth IRA, and how to put investments together so that it works towards your goals. People don't need financial advisors, especially when they're just starting out learning about investing. Honestly, unless you have millions and millions of dollars worth of assets and have at least a seven-figure net worth, and you have multiple streams of income coming in, that would be from your job, from your spouse's job, maybe you have real estate income coming in, you have multiple investment sources that are also bringing in money, you have maybe your own side business or a full-time business that's also bringing in money, you have maybe like a licensing deal that's also bringing in revenue. That kind of stuff would definitely warrant needing some kind of professional help. And in addition to a financial advisor, I'd also at that point recommend getting a good tax attorney as well as an accountant, so that this way you can manage all of these income streams and all of these different types of assets so that you can get the best tax advantage as well as you can manage your money effectively. But most of us, like this particular individual that was asking, we don't have multiple, millions of dollars worth of assets that we need to manage. All we're really doing is we might have one or two income streams, and we're just trying to look to open a simple Roth IRA, which in all honesty can be done all on your own. And if you've ever opened an account, say like at Target.com or Walmart.com or even on an Amazon account, it's basically the same thing as opening up a Roth. You create an account, create in a password, and you put in some other information. You link up your bank information so this way you can pay for things, and then you literally go shopping. All right, you pick the particular products. So for Walmart and Target, you pick a squeegee, or you pick up, you find a pair of scissors, whatever it is you want, you put it in your shopping cart and you hit buy. With like Vanguard or Charles Schwab or M1 or anything like that, you find, shares of companies. So, you pick shares of Fiskars, or you pick shares of Sharpie or whatever it is, and you put them in your cart and you just buy them. And these are the things that you would be paying a financial advisor to do. They would literally just be opening the account for you with a few clicks of a mouse and buying the shares of things that they told you about. And in all honesty, that's not something that you should be spending money on. This other comment says, don't step over dollars to save pennies. Remember, even Tiger Woods has a coach. But again, most of us are not Tiger Woods level when it comes to personal finance and investing. We don't have millions and millions of dollars worth of assets and income streams coming in that we would need a coach in order to make sure that we're managing everything correctly. And this is not to say that you should never get a financial advisor. If you've gone over and you've done your homework, you understand the differences between IRAs and 401ks and 403bs and stocks, bonds, mutual funds, index funds, REITs, annuities, bonds, all that kind of stuff. And you understand how investing works, and you still want to talk to a professional about your personal goals and your risk tolerance and what would be a good strategy to reach a particular type of retirement lifestyle, then by all means go ahead and do it. But now you're going to be doing it with the knowledge of what all these different types of assets are and how they make money for you. The bottom line is that if you're new to investing and you're just starting out, the best thing that you can do is to educate yourself and pick up a few books and just learn about the process and what's involved. And if you guys have any questions about anything that I mentioned, or any comments, or if you agree or if you disagree, I'd love to hear about it. Go ahead and leave them down in the comments below, and I will talk with you guys later. Have a great weekend.